Back a lost generation of homeowners. The Wall Street Journal this morning taking a closer look at why millions of Americans are renting instead of owning. Joining us right now, the Journal's chief economics correspondent, John Hilsenrath. John, good to see you.
Good to be here, Maria.
So the title on this morning's story, home buyer shortage threatens recovery.
Right.
The market has been strong with the exception of the middle class buying homes.
Right, and this is particularly the case for millennials, young people who are burdened by student debt and getting married later. And what we're seeing is the home ownership rate, as we report in the story today, has fallen to a 51-year low of around 63%. We quote some analysts who are saying that it could go below 60%. Now, let's remember, home ownership 10 years ago was seen as the American dream. Right now, about 200,000 to 300,000 fewer homes are being bought every year, mostly by middle-class Americans.
Yeah, so, and then the piece also says that home prices rose 83% of the nation's 178 major real estate markets. So prices are even getting away from folks.
Prices are getting away from some folks, and the reason for that is that builders aren't building. We've had a boom in construction of apartments and condos, but not single-family homes. So, and then the other part of this that we have to talk about is, let's bring it back to the Federal Reserve again. Interest rates are very low, and that ought to be spurring a lot of home buying. But a lot of households are getting cut out of the market because banks are reluctant to lend to anyone with any kind of scuffing on their credit record. If you look like you don't have a good track record in credit, it's very hard to get a mortgage these days, even though interest rates are very low.
Sure.
And again, that hits the middle class.
And John, did you all take a look at the millennial buyer? Because that seems to still be the big problem. You need that younger buyer to basically spur sales. And that young person is not coming into the market. We still don't really have a clear answer as to why.
Well, so there's this barbell effect that's weighing on the market. So on one end, you have the millennials who are coming out of college in one of the worst job markets in the history of the country, and have burdened by a lot of student debt, getting married later, so they're not going out and buying homes. And then you have a huge population of baby boomers, which is downsizing into smaller places, into condos, and so that's weighing on the market as well.
Anthony, do you think this is going to impact the broader economy?
I do, because at the end of the day, housing ties everything together, and John knows this from working with the Fed. If you don't get the housing market right, Maria, you don't get the small businesses right. 60% of the small businesses in the United States are tied to housing. Just think of our main streets. They're loaded with hardware stores and sheetrock people and plumbers and electricians, and so when you have this sort of middle-class slowdown in housing, very, very bad for economic growth.
Yeah, and also,
so Maria,
go ahead, John.
You ask if this is gonna hurt the recovery. I would say it already has.
Yeah, exactly.
In a typical recovery, what happens is the Fed lowers interest rates, and you see a lot of interest-sensitive sectors moving forward. So you see housing, you see car sales, all going forward. What's happened in this expansion is we have had a boom in car sales, but we have not had the boom in housing, which is a bigger piece of this economy.
Yeah.
Not only, in addition to everything that Anthony mentioned, a lot of people extract equity from their homes. It's a better tax deal than a credit card, and so you don't have that impetus going on.
Yeah, that's a great point, John. Shelby.
John, what are the ripple effects? Because as we've been talking about millennials, so many burdens. It feels like the weight on their shoulders is just getting impossible to buy homes. They have student debt. They can't find great jobs. But home ownership is a key component of retirement saving. So what does this do to our economy, 50 years down the road?
Well, I think that's certainly the case. I mean, you make a really good point about retirement saving. A lot of people do their saving through their home. They pay their mortgage every month, and eventually they're taking out equity in their home, and they're building up wealth. So you don't have that form of wealth creation, which again weighs on consumer spending. The home equity weighs on consumer spending. So this is a fundamental ingredient in American life, and it's being transformed. And then, I think it's also affecting this election cycle. It's one of those factors. There's a lot of factors out there among the middle class that are forming anger and resentment in the electorate. It's led to people getting behind people like Donald Trump and Bernie Sanders who want to change,
right.
You know, the disappointment with the housing market is part of that.
Yeah, and in fact, one of Hillary Clinton's themes to her economic plan, I understand, is free tuition. So this is all, you mentioned that, you know, the connection to the election. John, real quick before you go, good story in the Journal this morning on homes. Tomorrow is going to be retail sales. That's going to set the tone. And we know that the consumer has been one of the bright spots, even though the earnings in the sector have been not great this week. What are you expecting out of retail sales tomorrow? And do you think it impacts markets?
Well, I'll tell you what, those retail sales numbers better be strong because so many other sectors, as we just talked about, housing.
Yeah, and the business sector, too. I mean, the corporations are not spending.
Business investment has been a very weak part of this economy, so have exports. So, you know, we're counting on consumer spending to keep this expansion going. If we see it slowing down, then, you know, that's reason to worry. The fact that the stock market is making new highs, the fact that the unemployment rate has come down, you know, leads me to believe we're going to see decent growth, but don't expect consumers to be going gangbusters in this kind of environment.
Yeah, we'll see what that number is. That's going to certainly set tone for markets tomorrow. John, good to see you. Thank you so much.
Great to be here.
Later